Hi everyone, this is Mari from The Going This Way. This is my first training video. I'm gonna cover brokerages, which brokerage I use, other brokerages that are available. I'm gonna cover charts, how to set up your charts on both your desktop and your smartphone. So I downloaded like a casting app to my laptop so I can show the smartphone, because I know many of us are probably going to be trading through our smartphones. I don't know how many of us will actually carry around a laptop to do trading from it. So right now in these modern times, the cell phone, the smartphones are the way to go. I'm going to cover the PDT rule if you're not familiar with it, and then give you a little bit of insights behind what I do. So first, let's go ahead and get started with the different brokerages. As you can see right here, I have the Webull app or desktop version downloaded on my laptop. I also have it on my smartphone. I use Webull. Some of you may have heard of, I think it's Robinhood. That's another brokerage that you can use, but I am not a fan of Robinhood, and I'll explain why. Anyone that's been trading for a while knows that a few years ago, AMC and GameStop were going through this meme phase where a bunch of retailers are individuals like myself and you that trade the market, and then you have the market movers, which are like these big companies that also trade. But retailers just like you and I decided to go long on GameStop or go long on AMC. And if you were around during that time, people banked. Like, they made a ton of cash. I think GameStop was selling at $35 a share, and when this entire situation occurred, GameStop went up to like $300 and something a share. So imagine how much money you made. I, during that time, also got in. I was trading AMC, and I think I bought like 1,000 shares for $9, and I sold out at $56. So you do the math on that run. So long story short, why I don't like Robinhood is because they partnered with the market movers, and when people were trying to sell or buy, I don't remember if it was sell or buy, they stopped the platform from doing it. So stopping it they stopped people from buying. That's what they did. They stopped people from buying, and what happens is that now the stock starts to go down. So they were basically on the side of the market movers versus the retailer. They were really corrupted, and they stopped it, and therefore people weren't able to make as much money as they could have if they hadn't interfered. Google it if you haven't heard of the story. So that's why I'm not a fan of Robinhood. After that, I changed from Robinhood and went into Webull. Have not had a problem with them since, so I'm a huge Webull fan. So that's a brokerage. Basically what brokerages do is they allow you to buy stocks. Another one I think was E-Trade. I used this years ago when I was in my 20s, and Webull and Robinhood wasn't around. I used to trade with E-Trader. I have a couple of Microsoft stocks there. I have Oracle stocks there. I have a bunch of stocks that I have long-term investments there. So E-Trade is one. Webull is another one. Fidelity is another one. You can trade through Fidelity accounts. But like I said, I use Webull. I downloaded the Webull app on the desktop, and I'll walk you through how to set it up and what it looks like. At first, when you get started, it's a little scary because you have all these charts, all these different things, and you're like, what the heck is all of this? How do I set it up? I remember when I first got started, I had no one to walk me through like how to set it up, so I spent days trying to figure it out. So let's see. First thing we're going to talk about the watch list, how to set up a watch list. Right now, these are the three that come as defaults with the app itself, but you could add additional ones. I have, when you look at my Weibo on my smartphone, I have some apps, I mean some companies here in my watch list. Like, you can create different watch lists. I have one that's called anxiety stocks, and then I have like my regular stocks, so you can create different watch lists. And I remember I was connecting with one of my friends, Pedro. So Pedro, hi, if you're here, Pedro Fonseca. And I sent him a screenshot of my Weibo, and he's like, what does anxiety stocks mean? And it's just basically the stocks that give me anxiety. I probably had like a long position or a short position, and I hadn't hit the number, and I put them under anxiety just to watch it closely. But you can name it whatever you like. My watch list, all stocks. So you create your watch list there. By default, like I mentioned, you have the my watch list and all stocks. If you have, let's say, stocks that are in the finance sector, you can create a watch list and call it the finance sector, right? So Bank of America stocks, Chase, etc. And then you'll see right here, finance sector. If you have tech stocks, you can name this tech stocks. If you want to kind of keep it organized and divided, like, you can create your own, different watch list. To add additional companies or tickers, what you do is you go add symbol, and you look for the particular company or the particular ticker. So let's say Amazon, it's AMZN. You see it right here, so you can just add it. You decide where, and there it goes in your watch list. As I mentioned in previous videos, I only trade to leverage ETFs, so it's TQQQ right here, and I only trade SQQQ. And if you're not familiar with these, TQQ goes with the market and SQQ goes against the market. So when I talk about the market, I talk about like the SPY, right? Or the NASDAQ. This is the SPY. So when you hear on the news that, oh, the market sold off by 200 points, by 300 points, they're speaking of these. They're speaking of the SPY. They're speaking of the NASDAQ. Oops, there it goes. Of the NASDAQ. Now, if you look at the charts, let's go ahead and zoom out. Right here, you see the way the chart looks. Now look at TQQ. Same exact chart, you see? Same exact symbol or pattern, more like it. Pattern, not symbol. Alright, let's bring it down. You see the pattern? And let's go back to SPY. You see the pattern? So when I say that it follows the SPY, it follows it directly. Another one that follows the SPY directly is QQQ. And TQQ derives from QQQ. TQQ is a triple. It means triple. The T means triple, QQQ. So it's 3 times what QQQ is. It's not a big deal like to learn this right now, but what is important is that you understand that the SPY is basically the market, ups and downs. TQQ follows it directly, but if you see, it's at a cheaper price, right? Are you gonna get in at $597, or would you rather get in at $73.46? So that's why I sell or trade TQQ, because it's a smaller cost, it's a smaller investment. So if I was to buy 1,000 shares of this, it would be what, 73,000? Versus if I was to buy 1,000 shares of 500 of the 597, it's a huge investment on my end. So that's why I trade TQQ. And then I said I also trade SQQ, and that it's the opposite. So if you look at the pattern, it's this pattern but reversed, right? So if we were to flip this around, it would be exactly like this. So you see how it's going up here, and this is going down, down. These two are the same. The SPY and the TQQ are exactly the same pattern. This one has it reversed. So when you hear, oh, the market is selling off, this is going up, it's pushing. And when you hear that the SQQ, when I say this, is SQQ. So when you hear, oh, the market's selling off, the market's selling off, you go into SQQ and it's pushing up. And when you hear that the market is pushing, you go into TQQ and you're going to see it push up. So why is this important? Well, if you want to trade, you want to trade whether the market is pushing or selling off, right? So what do? If the market is selling off, you're not going to want to go into TQQ because it's selling off. So you go into SQQ and it's pushing up because the regular market is pushing down. So then you can go in here and do a long position. And just to mention, I do not do option trading. To me, I know a lot of people love to option trade. I don't. To me, it's an investment and sometimes you can lose it. So if you buy 100 shares for, let's say, $300, and for whatever reason, because of the volatility of the market, that you were going long and it went short and you lose a lot of your intrinsic value, then you're done. You basically invested a huge portion of your funds and you're out. Now, the positive part of it is that if it goes in the direction that you are intending it or seeing it go, so let's say you get in at $50 and the market goes to 51, that $1, you make so much more money than myself that it's just buying stocks. So that's the positive. You make more money with a smaller investment. But the negative is that for whatever reason, if it goes down, you lost those funds. With trading stocks, you can hold on to it. As long as you don't sell, you don't lose money. So let's say today the market sold off, but then tomorrow it recovered. So since it recovered, yes, tomorrow I didn't lose any of my investment. Unlike with options, you lose that investment. So I digress, back to this. So here's SQQ again. If the market's selling off, this is going to start pushing up. If the market is pushing up, TQQ is the one that you jump into. Now that you saw how to create a watch list, how to add your different companies, or how to add them into your watch list, let's teach you how to set up this little chart. Because to me, when I first got started, that was like the most confusing thing in the world. I don't like all of this busyness. To me, I like it all clean. Just let's close all of this. There. Okay. This is the trade and buy. You can put it to the side if you want. You can add like 2 charts if you want them side by side. I can walk you through like that later on. But let's go ahead and make this chart like readable. Drawing line styles. Alright. Right here, I don't like the way this looks. It gives me anxiety. So I usually choose the candles. You see right there? There it goes. There. You see how, oh my goodness. You see how it changed to these candles? It looks a bit more cleaner, right? Let's expand. Why is it expanding like that? There. Alright. Alright. So that's the candles. It's easier to read than the way that it looked just like a drawing. Then what we're going to do, we're going to set up our indicators. Alright, where do I go to set up my indicators? Is it here? No. Indicators, there. And let's do all indicators right here. And my favorites, no. There's a couple that I use. Let me get those from my phone because like I said, I trade from my phone. Alright. Let me go to TQQ. And then indicators, I use the ST. Where is it? It's not here. That's weird. Let's do the VWAP. Alright, so let's add the VWAP. I'm not sure why the ST isn't here. I'll show you how to set up the ST on the smartphone because it's such a good indicator. The VWAP, the moving average, right here. So that's built in. And then we're going to do the EMA. Which is right here. We're gonna set it up right here. The volume, VOL. Here it goes. The RSI. And then the MACD. Alright. So the moving average, you're gonna edit this. And my moving averages are right here. So my moving average, MA, right here, moving average, I have it set up for the 5, the 10, and the 20. Everything else you can delete. Five, 10, and 20, and you can color them however you like choose different colors for it. All right, so moving averages within the last 5 days. How did this stock move? Within the last 10 days, how did this stock move? And within the last 20 days, how did this stock move? It's important for you to understand because when you look back, it's a clear indication. As you continue to trade, you'll see that a lot of the patterns repeat themselves, just like history, right? So knowing like your 5 day, 10 day, 20 day moving average will give you somewhat of an indication of which direction the market is going. And sometimes what happens is that if the market pushed up 5 days ago at the $20 mark, if it pushes from there, then it followed basically that previous trend. The EM, all right, so we selected it here. We're gonna select done. And then we're gonna go back to all indicators. We're gonna, VWAP, we'll leave it alone. The EMA, I have 5, 10, and 20. And we're gonna go here, 5, 10, and 20. Done. All right. Then your MACD and your RSI, you leave it there. Right? So now we're gonna look at our chart. We're gonna just close the indicators here and we're gonna look at our chart. You can close the indicators. Good old desktop, right? Let's see if I can move this down. Alright. So, did it remove it or did it just close it here? Because I don't want to remove it, I just want to close it from. It removed it. Nice. Let's go back and put it in. EMA, MA, NA, MA, and that's moving average, right? So you see now that we have our indicators in, you have all these lines. These lines are so important. Maybe I can close this and it expands this down so you can get a better view. There. All right. On my phone, I could actually hide all these indicators by just pressing like an up button, but here we are on the laptop. So if you see here, you see all the lines, these are all the EMAs. All the VWAP is missing. That line's important. There it goes. There. This is the VWAP. So normally what happens is that depending what portion or what side of the VWAP you're in is if how the market's doing. So you see how we're under the VWAP for TQQ? It's because we're selling off. Now if you go to SQQ, you'll see that we're above the VWAP. You see that? And that's because SQQ has been somewhat trying to push up the last couple of days, and this is because of the everything that's happening with Iran and Israel, and everything that's happening with the bills that are trying to be passed for what's going on, this big beautiful bill that's being passed, and there's a bunch of debating around it. So because of everything occurring, SQQ has been trying to recover, trying to push up. So that's why you see it on top of the VWAP. Normally what this indicates is if it's above the VWAP, we're going in somewhat of an upward trajectory, and if it's below, we're going somewhat in a downward trajectory, as you can see here. You see? The way that I explain these lines to my 7-year-old son, for him to understand in a sense, is think of these all as gates, right? And him and his friends are trying to get to the park on this side over here. Here's the park, and then there's a gate, and then there's another gate, and there's another gate, and another gate, right? So if you're not able to get around that gate, you're probably gonna go back, and that's how I explained it to him. So you're trying to push past this gate, and this gate. All of these gates are blocking your candle from going in upwards. A lot of the times this is the strongest gate, this VWAP, and if we break past this VWAP or this gate, then you see that candle just push in an upwards position. And then I tell him, like, which ones are your police officers? And he tells me 7284, and he'll tell me over here 7477. And what does that mean? 7284 is our low, meaning that if it breaks past that, it's more than likely gonna sell off. And this is our high of the day, 7477. So if it pushes forward or above it, then it's probably gonna push past it. So I tell him, which ones are your police officers? Because they're watching out, right? They're watching out to see if it's gonna push down or if it's gonna push up. So then he'll look for that 7284 and tell me it's 7284. So in short, these lines give you an idea of where we're at. If we continue to push and it doesn't go anywhere, then more than likely it'll go down. So if you can look at the patterns here, see how we're on the opposite side, and we're trying to go up here, but it didn't get past this one gate and went back down. Then we're trying to go up, and then it got rejected by the strongest one, the VWAP, and it went back down. Rejected by the strongest one again, went down. Rejected by the strongest one again, went back down. Now if it was to go past it, you'll see it push all the way through. Let's see if we have that pattern anywhere. You see? Where it's there, right here. You see how it passed it, and then it just started going all the way up to 495. It passed through this gate, and then when it rejected, it kind of sold off. You see how it used it as its support and it pushed off from it. So this is how you read these patterns. You look at where it's going, if it pushes past the fence, and then when it goes down, does it go back down? Like, did it continue going down, or did it use this as a support to go back up? So that's understanding how these candles work is what's going to make you a good trader, because people sometimes trade based off of feelings, but what we should be trading is based off of the chart. So right here it dropped down a bit, but then it automatically came back up. Oops. And you continue to see, Jesus, ugh, oh my God, and you continue to see how it starts to get closer and closer. And one thing that I tell my son, because I'm teaching him how to trade, he's 7 years old, so I try to make it like really easy for him to understand. If you look here, you see how it went all the way up to 74.95 and then it got rejected. It tried to go up, but then it got rejected. It went back down. And do you see it getting closer and closer and closer to this gate? Once you see it get closer and closer, and it can never pass this 74.95, it never went back up, you can tell that it's gonna sell off more than likely, because it continues to go down, continues to go down, continues to go down, continues to make lower highs. And then once it gets here, you see that it's right on the line and it's still not able to push up. And then what happens? It just drops all the way to its support, 73.40. Again, it pushes up, it barely pushes past that fence, then it comes back down. So just understanding how these patterns work. Let's see. So I'll get more into the patterns and understanding how it works. How did 73.40 become its support? There's reasons why 73.40 became its support, and the way that I like to explain it is yesterday's resistance is today's support. So if yesterday's resistance 74.95, let's say this is the resistance, because what's happening is that you're trying to push up and you're not able to push up, so it's resisting. Like, think of it like if you're trying to go through a door and somebody's pushing you back. That's what resistance mean, right? So 74.95 is the resistance. Once it passes that 74.95, 2 days later, the support, this is support where it doesn't allow you to go any lower, the support will more than likely be that 74.95. So somewhere in this chart, 73.40 was one time a resistance. And you'll see around here, you see 73.40 around here was one time its resistance, which is why it found support at 73.40. All right, we'll get more into all of that later, but this is basically Webull set up in a desktop. I'm gonna go ahead and try to cast my phone. So you can see it set up on a smartphone. Yep, there it goes. All right, so this is right here, my smartphone. I have TQQ open, and like I said, Anxiety Shares is there for us live. I am not fibbing. You have the SPY. Hey! Hey! All of this isn't needed. No. Go to your bed. Scared the living crap out of me. Alright, so there's got the SPY, the QQQ, and the TQQ, and the SQQ. Now, let's go into the TQQ, and to set up your chart, once you log in and you create your charts, you're gonna scroll down, you're gonna go here, your indicators. It's so much easier. And this is STT. I love STT. Put it on. I'll explain it in a minute. The VWAP I explained already. That was that yellow line. The moving average, it's one of those bunch of different lines that you saw. The EMA is there as well. The volume, RSI, and MACD. I didn't explain it on the desktop because it was driving me crazy, but I'll explain the volume, RSI, and MACD now. So you'll just go ahead and select them. You can do add indicators, ST, and I'll find it for you down here, super trend. Then you can do EMA, and then you can do right here 5, 10, 20. You see EMA, and then you select the this little icon right here to put in the different settings, and then the MA like I explained. And I'll pause just for a second so you can jot down the different indicators: ST, VWAP, MA, EMA, RSI, volume, and MACD. Those are the ones that I use. Alright, so now that you have that, you'll have your chart set up like this. And it's super easy to understand. There's not a lot of noise like the desktop app where they had like all these charts and all these buy options. No boil. You can set up here reminders. You can trade options, or you can trade regular based off down here. So why do I like ST? It gives you these different lines. You see the VWAP is here, and it also kind of gives you a trend or like second type of VWAP to tell you where previous days resistance and support was. So to me, it gives you so much more insights. These are the moving averages here, and this is the VWAP. So when I trade, I look at all of this. I look at, is it pushing past the gates in a sense, right? Is it being rejected by this VWAP? For the last couple of days, the market has been trading sideways. And by what I mean by that is, if you can see there, it's within a small little range. It's going between 72 and 74, and it hasn't broken any of those. It hasn't broken the high, and it hasn't broken the low. So it's just kind of going like that, sideways, going up, getting to this high, and then going back down. Maybe it breaks it a little bit and back down. Maybe it breaks it a little bit, but it's been trading sideways, but mostly going down, because I remember that it stopped at 73 and now it's down to 72. So right now, if I was to take a trade, I would wait for it to pass this line right here, this yellow line, possibly even 73.60, that cop that I spoke to Aiden about. You see, 73.60. That's basically the watcher to see if it goes past the high. And if you're listening, where would the other cop be? 73.10, right? So normally if it pushes past this, it would sell off. Another good thing is that ST, they give you these little arrows that show green if the trend is looking upwards, and it shows red if the trend is looking to go downwards. For the most part, it's pretty accurate. It's just not going to tell you it's going to go down 30 cents. It's just going to tell you it's going to go down more than likely. So if you see, it's more than like, it's a lot. It's pretty accurate. So that's how you set up your charts, both in the desktop and in this app. So stay tuned for my next video. We're going to talk on the next video about, well, actually I said I was going to talk about the PDT rule. So the PDT rule, and let's go ahead and Google it so you better understand like what the PDT rule is, because let me stop the screencasting. PDT rule trading. It's for those of you that are not trading with more than $25,000. There's a restriction on the account. So what happens is that you would have to wait, I believe, 3 trading days for your funds to clear to be able to get into another trade, or 4. Yeah, to traders who execute 4 or more day trades. So let's go ahead and read about it, because I'm not too familiar with the PDT rule because it doesn't affect me. But the PDT rule, pattern day trader rule, is a regulation established by FINRA, the Financial Industry Regulatory Authority, that restricts trading activity in margin accounts. It applies to traders who execute 4 or more day trades within 5 business day periods, provided those day trades constitute more than 6% of the total trades in the account during that period. Day traders involve buying and selling the same security within the same trading. So yeah, that's a bunch of, I don't know what the heck they're saying. So in short, if you're in a margin account and it falls below $25,000, margin account is where you fund it, and you're trying to trade, you sell your stocks, and then that money hasn't cleared yet. You have to wait for the funds to clear to be able to buy more stocks. So to avoid that entire PDT rule thing, if you're able to fund the account $25K or more, do so. If you're not, don't worry. It's not like it's going to kill you. Like, you can fund it with 5K, 10K, and then grow your account to that 25K. The only thing is that you might not be able to trade every single day. You can trade on Monday, let those funds clear, and then trade on Wednesday, let those funds clear, and then trade on Friday. So you're limited to the amount of trades that you can do because you have to wait for those funds to clear. Again, it's a good thing. You could also look at it as a good thing. You're sitting there, you're evaluating your previous trade, you're doing trainings, you can even do paper trading. So use that time wisely. Don't look at it as a restriction. Look at it as an opportunity to keep growing and understanding like what you need to do. Alright, so that's it for me. Stay tuned for the next video where I am going to discuss, what am I going to discuss in the next video? Oh, this video is kind of long, so I'm going to discuss then the RSI, the MACD, in that next video coming up, like the volumes and how to look at the volumes and how the volume, the MACD and the RSI tell you more or less the direction that these stocks are going to go in. So as you were familiar with the charts, I can continue talking all day long about this, sorry. So you saw the charts and you saw the indicators. They'll, you know, this VWAP is telling you like this is a gate, you can't push through it. So you understand already that these lines give you some insight of if you're going to be able to continue going up or down. But the RSI and the MACD and the volume can give you more of an idea of the direction that that stock is going to go in. And this right here, like this little, let's see if I can expand this right here, this little pattern is so telling. And you see how right here it started going down and then the stock dropped and the yellow line is at the bottom, and then once it crosses over it starts to go up. So when you're trading, you're looking at the stock, the direction, the volume that it has. Like, are the candles big or are they small? Are the candles moving fast or are they moving slow? All of that tells you a lot. You have to pay attention. And then you see how it's so separated and it's not doing the turn. So as I watch the stock and its direction, I keep an eye on the MACD and if it's turning. Once it crosses over, you'll see that this starts to push up. So this is such a big indicator of which way it's going. And I'll talk more about the RSI and the volume later on, but I gotta go. Peace out.